Hey, how you all doing? Welcome to my monthly update. So March saw more changes in the investment market. I know this sounds like a repeat, doesn't it? It sounds like the same blog that I did last month. But we did see interest rates go up outside of the RBA cycle. And a lot of people sort of ask me, why are the interest rates going up outside the RBA cycle? I mean, why is that? Surely if the Reserve Bank of Australia is not increasing interest rates, why do the banks? And that's because 40% of what the bank lends out is funded by other countries. It actually comes from overseas. So when the Federal Reserve in the United States put their interest rates up in March by 25 basis points, that had a knock-on effect to Australia as well. So that's why the rates are going up. Now, if you are concerned about interest rates going up, there is an option to fix your rates. And I do encourage you to pick up the phone to your mortgage broker and have a chat with them first, or call me if you don't have one. But there are options to fix, and a couple of things you need to be aware about when fixing your interest rate. First thing, they're really good for budgeting. So if you are on a bit of a tight budget and you just need to just protect yourself to make sure you've got the security that if interest rates do go up, you're going to be paying the same amount. So you know that I know I can afford this amount today. So I'm just going to fix it in because if interest rates goes up, it's pretty tight. Okay. So yeah. So if you're budgeting or if you're saving and you just need to make sure you know how much it is, then absolutely fixed rates an option for you. Security, it does give you security. It protects you against interest rates going up, but do bear in mind that you don't get to take advantage of interest rates going down. So if you're fixing in and then interest rates do go down, you're still going to have that same interest rate. Limited flexibility. So what do I mean by limited flexibility? Well, the lenders buy this tranche of money, a particular sum, and so because of that, they do tend to limit what you can do with that money. So what am I talking about? I'm talking about sort of paying extra money into the loan, so getting it paid down quicker, having an offset account against it. You can't do these things. And I say in the majority of cases you can't do it. So there are options available. Please talk to me or talk to your mortgage broker if you need to understand that better. Break costs as well. So because these funds are being held by the bank at a particular cost, if you close that fixed account down early, there may be costs involved in actually getting your loan, closing your loan with that particular bank. So keep that in mind, break costs. And if you want to make sure that during the application process you don't miss out on a really good fixed rate, then pay the rate lock fee. Generally speaking, they're about 0.15% of the value of the loan. But the rate lock fee basically means that at application stage, let's say you're applying for a 3.99 now, and the settlement doesn't happen for 2 months' time, but in those 2 months interest rates go up, well, your rate at settlement is going to be whatever the new increased interest rate is going to be. So if you want to fix in that 3.99, well, then you better make sure that you pay your rate lock fee, and then in 2 months' time, when it finally settles, you're going to settle on 3.99. Generally speaking, they'll lock it in for 90 days, and after 90 days, you will get whatever the rate is at that particular time. So that's it. That's about fixed rates. As I say, gone through that pretty quickly. If you've got any questions, if you want to have a chat, please pick up the phone, give me a call, and we'll chat soon. Take care.